Okay, let's go ahead and get started. Hello, everyone. Thank you for joining us today for today's webinar, Institutional Investing in the 21st Century, How Social Media Informs and Shapes the Investing Process. Right off the bat, I just want to apologize for anyone that joined us an hour early, but we are ready to get started, and we have a lot of great content that I'm excited to share with you today. My name is Ira Amelhusen from LinkedIn, and today we're very excited to share some brand new research that was conducted by Greenwich Associates. Specifically, we wanted to understand how this group of institutional investors is using social media to inform their investment decisions and what financial services marketers and companies can do to leverage these social platforms to influence their decisions. And we found some very interesting implications that we'll discuss today with our panel of experts. So before we get into the webinar, I have just a few housekeeping items. The webinar will last about 60 minutes total, including 5 to 10 minutes at the end of the webinar for questions. Your phone lines are muted by default, but you can use the Q&A box on the right of your screen to ask any questions, and we'll be answering questions at the end. Also, after the webinar, you'll receive an email with a link to the PowerPoint deck, the research white paper, and a recording of the webinar, so you can review the slides and rewatch the webinar at your own leisure. So let's get right into today's webinar. Today, this webinar will include two parts, beginning with a presentation of the research by Dan Connell, who is the Managing Director at Greenwich Associates, and Emily Friedman, a research consultant here at LinkedIn. And then, to provide the finance marketer's perspective, we're very excited to welcome Carrie Ryan, who is the Director, Head of Global Web Services at Legg Mason, and she will talk about how they engage with this audience on social media, including a quick case study and best practices. So like I said, we have a lot of great content and insights for you today, and to kick off our discussion, I'll hand it off to Dan and Emily to take us through the research. Dan?
Hey, Ira, great. Thanks very much for the introduction, and thanks once again to everybody for joining us this afternoon. We conducted this study at the end of 2014, and we tried to get to the answer to these questions that you have in front of you. First of all, what has the adoption of digital media been in the area of institutional financial services? And then, how have the social media platforms penetrated the institutional investor market? And lastly, what is the use of these social media platforms meant to the institutional investor? And where do we see the influence of social media taking hold of these institutions? So a bit about the methodology and the study itself for some grounding. So in order to get an unbiased view of the market and go deeper into the institutional investor space, LinkedIn and Greenwich Associates began work on a global study of institutional investors back in November of 2014. And we reached out to just over 250 institutional investors on a global basis. And the breakdown of that respondent base you can see here, roughly 100 in both North America and Europe, and just over 50 in APAC. The respondents were also evenly dispersed based on assets under management, ranging from some with under $250 million in assets to a significant number with over $10 billion in assets. So we think we've got the landscape covered. The individuals that we spoke with were either influencers or decision makers, with the top three titles in the study being a chief investment officer, portfolio manager, or investment analyst. So we think we've got the right people. And then we also had a qualifier that ensured that participants in the study used either digital or social platforms at least once in the past year in their professional capacity. So we think we got the right folks. And moving to the next slide, I think the key takeaway, if we want to have one takeaway from the study, was the digital and social resources are certainly gaining traction among the institutional investor community. And then let's take a look at what we found in particular. So one of the most significant results of the study that we found was that almost every institutional investor we spoke with used some form of digital media. And that's represented here. You can see 97% of the respondent base use some form of digital media in their investment decision-making process. And maybe before I keep going, let me, for clarification, define how I use digital media and social media. So digital media I will give you some examples of both. Digital media would be things like the FT.com or the WallStreetJournal.com or a company's website or a blog. It all fit into digital media sources in my definition. And social media sources would be those platforms that you would recognize, such as here LinkedIn, Facebook, Twitter, and the like. Okay. So in addition to the almost 100% use of digital sources in their professional lives, equally as interesting was that we found that almost 80% of the respondent base used some form of social media as well for professional purposes. And if we move on, we found that when we probe deeper into the specific use of social media, we found that LinkedIn was fairly clearly the number one platform for professional use, with nearly half of the respondents saying that they were active on the platform. That'd be followed by Facebook, YouTube, Twitter. You can see the results here in the slide. We move on. In terms of how active these investors were within LinkedIn, we found that 85% of them were using the platform at least weekly, which suggests that LinkedIn as a source has become at least some part of the institutional investor's workflow on a daily basis. Okay. So clearly, social media is already playing a key role with institutional investors, but the question still remains, what are they using these platforms for, and how is that impacting the decision-making process? Well, on the next slide, we will see, not surprisingly, the highest-ranked activity was accessing timely news and industry awareness, and that's an activity that we suspect has been one where folks have been active on these platforms for several years now. But what did stand out for me, anyway, was a specific application to interactions with the asset management firms themselves, which I think is new. So if you look down the list at some categories, such as researching asset management firms, for example, had over a third of the respondents select that as an activity that they use social platforms for. And if you take the superset of categories specific to interaction with asset management firms, so including things such as seeking dialogue with an asset management firm, and we take all those categories and create a superset, we end up with nearly 45%, or just about half of the institutional investors that we spoke with that say they used some form of social platforms connecting to their asset management counterparts. Right? Really interesting findings for us there. So moving on, so we know that the institutional investors are using social media platforms. We know what they're using them for. We know where they fit in their workflow, but how does that use differ among the various social media platforms themselves? So you can see here the top categories of use, and LinkedIn has a clear advantage over the other social sources when it comes to market updates and industry-specific research. Also, in terms of opinions or commentary, LinkedIn stands out as the clear leader here. Interestingly, we did see respondents go to Facebook at about the same rate as LinkedIn in the product education category. And we also know that Twitter, for example, was high in sharing market updates. And I guess that's not surprising given the impact of Twitter. Lastly, we found that when institutional investors are doing a deep dive into educating themselves with specific content, LinkedIn was clearly the preferred destination. So this is another view of how investors are using major social platforms. So without belaboring the list here, I would just say that with the possible exceptions of sharing ideas and consuming market updates, at this point in time, LinkedIn has a very strong position in just about every category when we compare them with either Facebook or Twitter. And here you can see another view of how investors prefer LinkedIn for deep subject matter education. So in this case, there's a 4x multiple of respondents who strongly prefer LinkedIn for subject matter education over Facebook or Twitter. And although that does change on a bit on a regional basis, fairly consistently, I would say LinkedIn comes out significantly ahead here. So we've seen how investors use social media platforms, but the question still remains, what actions might investors take based on what they find on these platforms, right? So is it just interesting information, or is it information that is actually leading to further action? And here we show that almost half of the respondents were inclined to do further research on the specific topic. Interesting, but more interesting for me is that we found that approximately a third of the respondents either chose to start a discussion with their consultant or actually get the results and use those results in the decision-making process to work with a particular asset management firm. And I thought that was rather astounding results. And in fact, it'd be interesting to get Carrie to jump in here and see if she finds those results as interesting as I would, coming from the asset management perspective.
Yeah, I would certainly agree with you. I do find these results, very fascinating. I think the first one, the industry issue or topic, is something we are certainly seeing reflected on the performance of our social content, in particular on LinkedIn. For those of you who are on the line here who may follow like Mason, and if you don't, I certainly encourage you to do so. We have been using LinkedIn, for a variety of different reasons, which I'll, speak to in a short while. But we are finding that we just conducted a global investment survey where we polled investors and advisors, and we found some very interesting stats. And we've been publishing those segments of the research through infographics on LinkedIn, and we're getting just a lot of interest, a lot of engagement from that kind of content. So it certainly aligns with, the first statement in terms of conducting further research on an industry issue or topic. So, Dan, hopefully that answers your question.
No, it does. It does, clearly. So one of the things that we did find also, as we move on, nearly a third of the institutional investors who use social media for their role, it has had a profound effect on influencing an investment decision or specific recommendation. And we think that's something that's significant and new. And I don't think we would have seen that if we did the study 3 to 5 years ago. So key findings. And to recap real quickly the results. So the use of digital media in the investor workflow is extremely high, and we see that continuing to grow. And as I say that, it occurs to me that there was a slide in the presentation that I skipped over in my view, which showed the growth in the use of social media platforms, and I think that's significant, so I do want to go back to it if I can. And what that does show is that when we asked institutional investors how has their use of social platforms increased over the past 12 months, nearly 40% of them say that their use has increased. And I would tell you at the other end of the scale, a very, very small minority, less than 2%, have said that their use has decreased. And then perhaps more significantly, when we ask them how their use of social platforms will change over the next 12 months, actually a couple of percentage points more, 41% of them said that they would be using social platforms more in their professional lives over the next 12 months. And equally as small a number, less than 2%, actually said that they would decrease the use of social platforms over the next 12 months. So clearly it is something that has found its way into the institutional investors' workflow, and it's something that's going to continue to become an ever more important source of information for institutional investors. Okay. So in addition to market updates and people search, those type of things, which I think we would all say social platforms have been a source for some time, LinkedIn tends to be a significant source for deep subject matter education, far higher penetration rates than any of the other social platforms, for sure. And lastly, social media sources are not simply information sources. They've become a key input into decision-making and a call to action for institutional investors. Whether that call to action is to share that advice and information with others in the company, whether it is a call to action for them to contact their investment consultant, or it directly impacts their investment decision-making process and either influences them to use a particular asset manager or certainly to reach out and seek additional contact and interaction with the asset management community. So that's a high-level run-through of the results. And with that, let me turn it over to Carrie Ryan, who Ira introduced earlier. It's the Director and Head of Global Web Services for Legg Mason, to share some of her perspectives on the findings and what she and Legg Mason do in this particular space.
Great. Well, thank you, Dan. I think certainly from my perspective, I'm very much awed by these results and seeing the engagement levers and how, what the impact is using social channels, what the institutional investor is. I think for many of us, I think there's a lot of skepticism around social media, and I think seeing results, just as Dan has walked us through, is proof that social is certainly here to stay, and it's going to be a powerful channel in terms of disseminating valuable and timely information out to the institutional investor audience. And I think, there's a lot of reasons for that. I think over the last few years, as you've all seen, those of you who are, active on the social channels, you're seeing that, in particular with LinkedIn, there's been, obviously a heavy investment in making sure that the publishing aspect of those platforms is best in class. And I think the reason why we're seeing such high engagement is that through those platforms, individuals, institutional investors, financial intermediaries are finding that social channels in particular, such as LinkedIn, are very valuable in terms of aggregating content that they know is going to be meaningful and relevant for them. I think we all know in this age of information overload, trying to organize information, find the information that you're looking for that's going to be most valuable for you is a real challenge, and I think that's really the reason why we're seeing such positive stats from my perspective. So I'll turn it over to the next slide, Ira, and I can speak a little bit on Legg Mason's strategy around targeting the institutional investor on social media. So for those of you on the phone, Legg Mason, I would say over the last year and a half, we have really invested a lot more time and resource in building out our presence on social media to really create a destination that we could publish information that we think is valuable to our different constituents, be them an institutional investor, a financial intermediary, and a member of the general public and the media. But in terms of targeting, institutional investors in social media, we've been very, deliberate in our approach. And in particular, I'll speak to probably the channels where we're playing the most right now, and that would be LinkedIn and Twitter. So really, again, at the end of the day, content is still king, no matter what platform you're using and how you're distributing your content. Content, whatever quality you have, that it really is going to win the day. So for us, it's, it's all about delivering content that is timely, meaningful, and relevant. And when you're using the social platforms, it's really important to quickly convey clear value and relevance of content. Especially with the institutional investor, they have a lot of information coming at them, a lot of data, a lot of analysis. So really being very succinct in your approach and delivering what you see as a message that's going to strike their interest is very important. We obviously take the approach. We are very fortunate through the Legg Mason organization where, our investment affiliates through, from Western Asset to ClearBridge Investments and Permal and Brandywine Global, we have a lot of rich content that comes through from the chief investment officers and portfolio management teams of those organizations. And that certainly is something we partner very closely with those organizations because we know that information, their insights, is really something that's very valuable to the institutional investor. We also use, social media, in particular LinkedIn and Twitter. Our corporate communications team has a very coordinated effort to make sure that we are maximizing all press and media opportunities to showcase the investment thought leadership of our portfolio managers across the globe. So we're making sure we stay very close with them because we know that that it's also very valuable to see when we have someone speaking on CNBC or Bloomberg News or Fox. Very important to showcase that. We're also seeing, as I mentioned earlier, we're having great success with what we call more thematic content, more content we're publishing on different themes. So, for instance, as I mentioned earlier, we have a global investment survey that was conducted, for a number of different markets where we have a presence, and we've actually delivered the findings in a lot of rich infographics as well as opinions across the organization, and we are finding that information very valuable. And then again, that's another effort closely coordinated with our partners in corporate communications. And again, we also see there's value. We understand that there are individuals, from an institutional perspective, also looking at Legg Mason as an actual company. So we make sure that we use those platforms very well to promote and inform around corporate announcements such as earnings releases, key announcements as well. And then, for us, we also want to make sure that we're not just using social media as a megaphone in terms of, distributing content. We want to make sure that we are keeping our ear to the ground and hearing what's being said on social so we can tailor our strategy and work with our marketing and corporate communications colleagues to get the right messages out, delivered at the right time. So we do spend, through our listening tools, we follow conversations to really assess what topics are trending so that we can pass that intelligence over to our colleagues and they can inform the kind of topics that they want to pursue. And then we also view traffic patterns to really determine what optimal times to publish social content. And we've been doing a lot of testing in this area to say, okay, well, it looks like the feeds are getting very crowded on Tuesday afternoons. Maybe we have a better opportunity on, even perhaps we've actually had some good success with posting some information on, say, early Saturday morning when, people have a little more downtime. They're going through their social feeds, they're picking up the newspaper and all the journals for the week to kind of get themselves, up to speed on a lot of things they didn't quickly get to absorb during the week. So we're having some interesting success there because you could have great content, but if it's not getting published at the right time, you've missed your opportunity. So Ira, I'll go to the next slide. So I wanted to speak specifically around LinkedIn because we, obviously this is our social channel of choice given the professional nature of the platform and the engagement that we see from institutional investors, financial intermediaries, and sophisticated investors. So we've worked extensively with LinkedIn over the past year to pursue a number of paid advertising opportunities. So I wanted to quickly recap, as you see here. We've had a number of different successes, and this is just one of many that we've had with the platform, but wanted to highlight. So we had a recent campaign that we're actually in the middle of right now. We'll be ending it next week, but our objective was to raise awareness of our fixed income capabilities through Western assets, all the resources, investment insights, and information that we have, and then also to use it as a way to drive traffic to our website where we have a very rich assortment of investment thought leadership content that we know is valuable in particular to the institutional investor. As you can see, the great thing about the LinkedIn platform is that you do have that ability to very efficiently and smartly target your key demos. As you can see here, we were able to, since we're looking for the U.S. and the U.K. as part of this effort, we were able to really target, the financial services industry. Seniority, we were able to really look at, VP and above so that we could have that very sophisticated market segment, someone who is a key decision maker. Function, we also took a look at different roles with a portfolio manager, CIO, plan consultant, and again, looking at that seniority level to make sure that we're hitting the mark from a seniority perspective. And then obviously the UK, the target audience segments are a little bit different, but making sure that we took a look at the geo as a whole and looking at titles where we had a certain level of seniority within an organization, those individuals who would be key decision makers from an investment selection perspective. So in terms of our tactics, we delivered a number of sponsored updates that reached our target audience and as a way to also gain potential followers. And as you can see here, we had different targets from the geo, industry, function, and title to reach the right audience in the right time. And again, this is where LinkedIn was very helpful to us in understanding kind of how these different market segments perform, so they were able to, again, release the right message at the right time. And, obviously, as everything we do, we are very much focused on the metrics and analyzing the insights along the whole campaign period, so that we're always adjusting, not after the campaign has ended, but during the period, so that we can be very nimble and take advantage of opportunities that come to life. And you can see we did 22 sponsored updates, 16 for the U.S., and 6 for the UK, excuse me. And as you can see, our results were really popular in terms of the overall campaign click-through rate, 0.48%, the overall campaign engagement, 0.54%, and we were able to add 346 total followers during the campaign period thus far, which we were really excited about, because there's one thing to, get a sponsored update in your feed, read it, consume the information, but then to find it so valuable that you're going to actually take the step to follow the company that's producing the piece of content is just a huge win for us. And as you can see, one of the sponsored updates, as you'll see here, the Loving the Price at the Pump sponsored update, it was actually the top 10 of all sponsored updates within the financial services industry. So we were really, obviously, very pleased with the results that we got out of that campaign and seeing the conversations and the engagement for the content, which we know does a lot to highlight the Legg Mason brand and showcase our investment capabilities through our investment affiliate organizations. So pass over to the next slide, Ira. So just in terms of some best practices, that we're finding in engaging with social broadly, and I would say specifically to LinkedIn. Obviously, as I said before, content is king. We always have to be consistently serving timely, relevant content with a tone and language that's tailored to the target audience. And we can't overly push product. It's all about giving something that's valuable to the audience. Again, social content is very different than long-form content, and you've got to play to the strengths of the platform. So it's important to offer strong leads and intros, snappy headlines, thought-provoking questions seem to work really well in terms of an engagement lever, and clear calls to action that are compelling and reader-focused. And again, here, as I said before, it's all about the user and making sure that we're making it relevant for them. Again, utilizing an array of enticing, relevant, rich media to pull strong engagement. Again, bright, clean, relevant, and large text, if any. As you can see, we, if you go to our LinkedIn page, we make sure that we, try to create a lot of variety there in terms of how we're publishing our updates, so they don't all look like they're the same thing. Also, again, in terms of the frequency, we run generally 4 updates concurrently. We would say more than 4 kind of results in data dilution, and then less than 4 means a decreased frequency of rotation. So what we're finding that is working really well, and that's obviously a lot of very valuable guidance that we got from our LinkedIn team. And then obviously optimize for all devices by grabbing the reader in the first sentence and designing graphics that render well in mobile. And, certainly I think for all of us, we know how much people are engaging on social via their mobile device. It's important that we create an experience for using a piece of imagery or video, the like, that it renders beautifully on whatever device they're coming from. And again, we do spend a lot of time on measuring our approach, not only at the end of a campaign, but during the campaign, just to make sure that we're very nimble and flexible in our approach and finding any learnings and jumping on them during the way, so that we can get the most out of our campaign efforts and really around all of our non-paid efforts as well when we think about our efforts on LinkedIn in particular. So I'm going to stop here, Ira, I guess, and pass it back to you.
Great. Thank you so much, Carrie. It's so valuable to hear your perspective and your learnings from someone that's doing this in the industry and actually in the middle of a campaign, so it doesn't get more real time than that. So thank you so much, Carrie. I'm really excited to dive into some of these topics in our panel discussion. So I'd like to open this up to all of our speakers now, and I'll go through some key questions. I think we've seen some really great insights, really compelling research and best practices so far. But I'd like to kick off our panel with, and I'll actually go back to the research key findings slide, to ask the panel, what surprised you most about this research? We've seen this social media trend play out with mass affluent and even high net worth investors moving to social for for key information. But when it comes to institutional investors, what surprised you most with these findings?
Sure, this is Dan. I'll take a first shot at it since I probably dove into the data the deepest. To be honest, I think the thing that surprised me the most was I guess two things. One is the overall use. So as you see right here on the top of the page and the way we started the presentation, I was cautiously optimistic when we started the study that we would have a relatively high penetration of use of digital and social media, and when I say relatively high, my expectations were in the 80% range. Just giving what my perception of and sort of long knowledge of the institutional investor community and profile was, I thought that was going to be about right. So this, for me, was a significant deviation from that, and one that shows how far and how fast social and digital have both come into the institutional financial services space. So that was one. The second one that came out of this was the propensity for folks to take action based on social. So one of the things that we have heard over time in our studies in this space is the what I would call the confidence level in content on social media. And if we had a confidence level assigned to it 5 years ago, I think it would have been, quite honestly, somewhat low in terms of institutional investors using content from social media for decision-making and action-oriented purposes. And seeing today that nearly a third of the institutional investors that responded are taking direct action as a result of their experiences with social media is a dramatic change, and one that I think bodes well for the future, quite honestly, of social media in this particular space. Leave it to others to opine as well.
Great, thanks, Dan. Carrie, anything that really jumped out at you with these findings?
Yeah, I think, for myself, seeing the 97% number, to see a research that was such a high number for me was really surprising to see it that high. We know it's there, it's growing, but to see it at that level, it's definitely a huge amount of, opportunity, I think, for anyone who's marketing to the institutional investor, that they are, using these sources, and the fact that they're also using at least one social network, 79%. I think that's certainly, those are stats that can, I think, turn the skeptics into believers for sure.
Yeah, I think you hit the nail on the head. It's definitely a huge opportunity. It's numbers that we would expect with the investor audience, high net worth investor audience maybe, but with the institutional investors, it really was surprising to see. So huge opportunity for financial companies there. Great. So going back to the panel slide. So for Carrie, you mentioned that LinkedIn and Twitter are your prime social media platforms. Mm-hmm. How do you envision the different roles that LinkedIn and Twitter, and I don't know if Facebook plays a role, but how do the different social platforms play a role in your communications?
Yeah, I think for LinkedIn, we obviously, like I said before, that certainly is our channel of choice, the one we're spending the most time in, and I think we feel that's the biggest opportunity for us to, more deeply showcase a lot of our, investment thought leadership, our thematic type of campaigns, augmenting that with, some things that we know that will promote Legg Mason as a great place to work through different endeavors that are in recognition that our key employees are receiving, or key, events that they're participating in. So we see that from that perspective. I think from a Twitter perspective, we're going to start, we are obviously using it as a platform to promote investment thought leadership, corporate earnings, press releases, but we're also, I think, wanting to, change a little bit of our approach there, realizing the kind of high velocity of that platform and the challenges of getting your information heard on that platform because so much is being shared, and so many people are following each other. It's hard to really cut through. So I think we want to be much more nimble in terms of getting a quick statement as opposed to linking to a full-blown white paper, video, website. I think we're going to start, shifting our strategy a little bit more of having quick sound bites from, different folks across the organization who have valued opinions on different topics, given the newsiness of the Twitter platform. I think Facebook right now, we are using it as a community platform, really as a place to promote the Legg Mason's endeavors from a philanthropy perspective. And I think our strategy for that right now, we're not going to shift that strategy. We think that's the right way to operate on the platform right now. We obviously see a lot of publishers. We see some financial advisors using the platform, but I think they're using it as to more highlight the more human, softer side of their organization. So I think we're going to stay on track with that as well. And then when we think about YouTube, YouTube has, video is certainly becoming more and more popular, especially short-form video. And I think what we liked about the LinkedIn platform is that about the YouTube platform is that obviously, given that it's part of Google, it's certainly our presence there helps our overall, organic search efforts, which are very important to our overall digital strategy. I think secondarily, we do find it as the video player that is offered through YouTube is very helpful as we think about how we are using video on LinkedIn, using it in Twitter, and it's a very nice, seamless experience for the user. So when they're reading a piece of social content and we're linking them to the video, it's a beautiful display and an easy way to view and consume the video on Twitter and LinkedIn. So it really has benefits from that perspective. And additionally too, the subscription capabilities that YouTube offers, and in terms of being able to target individuals who could be following another investment organization, we see those as great opportunities to identify some of those prospecting opportunities as well.
Yeah, that's great, and I think you underscore a key best practice, and that's that every social media platform has a different mindset, and they all need to be treated differently as far as the content you share. And as we saw in the research, LinkedIn was the best place for deep subject matter education. So I think that's a great takeaway from today's conversation. Okay, great. Emily, I think this is a good question for you. What differences? I know these were global results that we went through today. But we did do the study within key countries. What differences did you see between countries internationally?
Yeah, we saw some interesting differences. I think key ones to call out would be around the area where Dan was going through some of the purposes that these investors have for tapping into social. And for Europe in particular, we saw that they were especially likely compared to North America and Asia Pacific to seek recommendations of investment products and services through social. So that was about 40% among those in Europe compared to just a little over a quarter in North America and Asia Pacific. So that was an interesting kind of different way that they're using it. Similarly, there's less of an importance placed on finding service and support from asset management firms through social for people in Europe and North America compared to APAC, where having that support through social seems to be a bit more important. So I'd say some of the things that are more useful to them that point to some of the differences they might be having in kind of the way that they go about doing their research and their roles regionally.
Great. And for those of you on the call, we did do this research in North America, Europe, and APAC, and we will be sharing those results in the future. Europe will be launching this week, and we'll share that ebook with you. North America will be launching next month, so stay tuned on our marketing.linkedin.com site for that launch, followed by APAC. Great. So next question I'd like to ask are challenges. I know within the financial services industry there's always challenges with compliance, measuring impact, but Carrie, what do you see as the biggest challenge for firms trying to implement social, and any thoughts on how to overcome those challenges?
Yeah, I mean, I think certainly, from compliance, you should keep them close and keep them and make them a part of your strategy. I think that's, starting to work very well for us. I think secondarily, what's a challenge too is really what I would say is the content marketing dimension of it. Social platforms, we can do a lot to create them and set the strategy for them, but they obviously need, constant tending. They need to be, filled with, wonderful, meaningful content. So I think that's, certainly a challenge in terms of making sure that we have enough content contributors who are able to really develop that kind of rich content. So what we've done is, our social media team works really closely with anyone that we want to pull content from in terms of, we've gone through, we put together a little training curriculum to really help everyone, because we have a lot of individuals across the organization, in particular in the investment management industry. We are definitely more long-form writers, so writing for social media is definitely a different mindset and a different skill set. So we've been spending a lot of time helping our the individuals across the organization to really help them along their journey of being much more, social with those nuggets of content. So I would say those are kind of the two things that, we spend a lot of time on. And then I would say, obviously, to your point around measuring impact, again, this is early days for us in our journey, but, making sure that we measure that impact. And, I think, where we hope to go with all of this is translate a lot of the engagement and the findings and obviously, the rich capabilities of a database like LinkedIn really has in terms of, how do we take that information and, really cultivate those leads into something that our sales team out in the field can use to, deepen those client relationships.
Mm-hmm. Yeah, in regards to your first comment about creating quality content, I think that's something that we've seen with a lot of financial services companies, actually even outside of the industry, is a challenge of creating quality content. It's one of the best practices that we've seen as I've talked to other marketers is, don't try to work in a silo. You mentioned working with your colleagues, but that's really the key is partner with internal subject matter experts to get that content and maintain an always-on marketing approach so that you're not doing it all yourself. Don't work in a silo. So I think that's great advice. Great. So another question for Emily. When it comes to our own LinkedIn members around the content that they want to see from asset managers and finance companies, do we have any data on what they'd like to see and where there might be a communication gap on social?
Yeah, so we definitely saw, and I think just worth reiterating, earlier in 2014 we actually did a version of this study among our own members and first tried to get kind of a baseline understanding of what does our audience, we actually looked at asset managers as well as institutional investors, tried to get a sense of what each of them are both posting and sharing on LinkedIn, what they're generally doing kind of from both ends of their roles. And in general, there were a few main gaps. I think there were more of a perception that there would be a greater need for service and support than there was for asset managers actually providing that, whereas what institutional investors were much more broadly seeking were types of content that they were looking for. So things like the opinions and commentary on market events. That was one of the top communication gaps that we saw. Another one was just sharing market and industry updates. So even just posting quick, relevant information about market events, things in a timely way. And I think there was a little bit to a lesser degree, but looking at content around investment products and services. So again, just a few key gaps there, but not as much. I think one area that was interesting was that not as big of a gap with the need for service and support through social.
Great. So I think that's a good point for those on the call. If you can fill in those gaps, then you can really stand out as an advisor to these investors by giving them content that they don't normally see. So that's really helpful advice. Okay, great. Thank you to the panel. I'd love to open this up to Q&A to the audience. If you have a question, you can feel free to type it into the Q&A box on the right. and we can ask the questions to the panel. In the meantime, I'd love to plug a white paper and an ebook that we're launching next week, which will be actually our first how-to guide designed for finance marketers. We talk to social marketing experts at companies like Citi, BlackRock, Digitas, and find out how are they moving to an always-on content strategy. And so we've got a lot of great practical advice and broad strategies that you can implement if you're looking to move to always-on from more of an event-based type of strategy. So launching that next week, so stay tuned at marketing.linkedin.com. So waiting for any questions. I don't see any questions coming in yet. Feel free to type them in. But while we're waiting, let's see. Carrie, would love to just hear your thoughts on, you talked about working with compliance, keeping them close, and involving legal. Any advice on addressing the challenge with legal and compliance, and how you set up the team to have success with that relationship?
Yeah, sure. I mean, we definitely have regular check-ins with them. We actually took the step a couple of years ago, and it's something that we're still doing with them. We created we have an electronic communications policy. Obviously, as a registered broker-dealer firm, we are certainly required to have that. But what we propose to them is saying, okay, we have to have this policy in place, but we know that these platforms and how people are using them are shifting and changing literally every day. So we came to them and said, we'd like to pull together an electronic communications policy handbook. So how do you translate everything that's in the communications policy into kind of your day-to-day experiences? Is it okay to do this on a website, or is it okay to do this on a social media platform? Really demarcating the rules of the road from a professional perspective as well as a personal perspective, and I think that was certainly very important. So that's been something we've been doing for the last few years with our partners in compliance. So we go together through that document, I would say probably about every 6 weeks, to make sure that everything looks up to snuff, or if there's something that we need to adjust and change based on a new piece of functionality that's put on a social media platform, or if there's some approach that we've taken a little bit differently from how we are delivering our message on any given social platform, we're certainly doing that. We have also pulled together for our organization a LinkedIn profile guide, so that we are certainly going down the road of bringing in a lot more of our client-facing personnel with archiving, so they can use those for LinkedIn for business purposes. But we also want to make sure that uniformly everyone in the Legg Mason organization is following certain rules of the road, because we know that's certainly how each employee is portraying themselves on this very visible network really should align to the brand of Legg Mason. So we've been working closely with them to pull together a LinkedIn profile guide that we, again, look at probably every 6 weeks, along with the electronic communications handbook, so that we can make sure that we're giving, our compliance partners comfort when we're also providing very specific guidelines to our employees. So I think that certainly paved the way for some good discussions. We've also brought in a firm to help us evolve our approach around social media, in consideration of kind of looking at it from a big picture perspective, not just looking at it as a marketing channel for content, but considering how you manage your brand and your reputation. And I think that's really where we've partnered very closely with our corporate communications team, so that we can make sure that our partners in compliance are really being well educated from a lot of subject matter experts outside of our company around the bigger implications around social media strategy. And it's not only about what we're pushing out, what we're saying, but it's also what's being said about Legg Mason, and how do we make sure that we're all lined up as a working group to address those challenges. So I think it's the combination of those three things is certainly helping us going forward. And it's always helpful for us too, because we're not really necessarily looking to be a vanguard and trying things that necessarily others haven't tried, but when we can have practices employed by in other investment management firms like ourselves, or through other similarly governed industries, that certainly helps us as we try to move the needle along and do more things with the platforms than we have before.
Mm-hmm. Yeah, that's great advice, and that's something that aligned with what we heard from finance marketers when we was putting our how-to guide together around the need to set up a policy with compliance that addresses things like turnaround time and just general rules of thumb with your employees on how to create content. So it all starts out with setting up those guidelines to begin with and following that. And I love how you revisit that almost every month or so. So that's really great advice. So I see a quick question coming in through here. Can Carrie or someone expand on targeting institutional investors? What demos do you use to pinpoint this audience? Sounds like financial services, VP level and above, or anything else to consider besides seniority and industry?
Well, I'd say from our perspective, we're also looking where we can on the investment management aspect of financial services. Excuse me. The financial services industry obviously has a lot of dimensions to it, and we obviously want to make sure that we align to our target audience. So we are looking at, the kind of wealth management, investment management landscape so that we can target those things accordingly.
That's great. And in addition to target,
I think. Oh, sorry. I was just gonna. It looks like another question that came in kind of ties in with that. Just getting the definition of how we looked at institutional investors for this study. So the only thing I'd add is not a demo, but just that we had the criteria of they had to be an influencer or a decision maker. So basically, either a primary decision maker or part of a group of decision makers on investment decisions or final client portfolio mix. Dan, if there's anything else to add to that that I've missed, you can feel free to chime in, but I think that was our main, other than demos and seniority criteria there.
Yeah, I think you've covered the basics. Happy to talk about positions or even the number of influencers versus decision makers, those kind of things. In fact, my recollection is I think it was 75% viewed themselves as decision makers, 25% as influencers in the process.
Mm-hmm.
But we did get an equal demo across the globe in terms of things like title, things like assets under management, type of firm, even allocation models. So I think we got a good demographic with this.
Great. Another question here I think Dan and Emily can help answer is, do we have any idea how these trends from the research extend to more specific job titles at institutional firms such as heads of trading desks?
This is Dan. I'll take that one. We did break down several of the questions and responses by title, right? So if you look at, and my recollection is fairly clear here, so Chief Investment Officer, and let's say the reasons why they've turned to social media. So the top reasons for the Chief Investment Officer were things like researching the asset management firms, researching the asset management executives, seeking additional content to inform industry-specific thought leadership, and to post or share products and services or information. Those were the top categories for the CIO, whereas the portfolio manager would be much more inclined to seek opinions and commentary on specific markets and events, learn about investment products and services, and seeking additional education and content to inform investment decisions. They were all tops on the list for portfolio managers. And then for investment analysts, they were much more inclined to go with reading timely news and market events and researching specific activities as their top. And then I would say, again, for the analyst, they were the top, but the entire spectrum tended to be of interest to the analyst, with very few showing a low presence. So the analysts are using it across the board, and the CIOs and portfolio managers, they gave it some of the top reasons for their use.
Great. Thanks, Dan. That was a great question. And we will be sending out the research to all the attendees so you can dive deeper into all that great data as we follow this webinar. Okay, great. I think that's about all we have time for today. I'd like to thank all of our attendees and all of our speakers today. I think this was a great discussion, really insightful research. Thank you for everyone that bore with us with the time change. I hope you had a lot of great takeaways from this. And like I said, we will be sharing the PowerPoint presentation, the research white paper, and a recording of today's webinar. Also, if you would like to read other case studies about how you can market to this audience and other financial services audiences on LinkedIn, you can visit marketing.linkedin.com. And as I mentioned, next week we'll be launching our how-to guide for finance marketers, moving to an always-on strategy. So keep an eye out for that next week. And other than that, please fill out your survey as you log out and have a great rest of your day. Thank you for joining us.
Great, thanks.
Thank you.
Thank you.